Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So as we go into next week, halfway through July now, the first half of 2021 has certainly presented savvy traders with an endless flow of back-to-back trading opportunities to really capitalize on this short-term macro-driven volatility. The metals, they've already made a stellar start to July. We had gold prices breaking out to 1-month highs just last week. Everything from gold, silver, platinum to palladium has posted explosive gains. In fact, at the beginning of this month, we identified with you a pullback across the metals for the end of quarter profit taking at the end of June as a great opportunity for you to buy into that dip ahead of the start of Q3 as we moved into July, and also before the Basel III regulation came into effect in the USA, where gold became reclassified from a tier 3 asset to a tier 1 asset, alongside inflation continuing to run out of control. So when we are talking you through that in detail on gold asset of the day, we identified with you that $1,750 per ounce zone as a real gift and buy opportunity at that level to build further positions into gold. And of course, last week gold prices broke out to $1,833 per ounce, hitting 1-month highs. Once again, another opportunity that we've identified with you has played out exactly as we predicted. And now, of course, inflation is the major theme that will continue to dominate headline news and drive the financial markets throughout the rest of this quarter. Volatility, it creates opportunity. And right now, as traders, we're living in some of the most exciting and rewarding times ever in history. Banks and hedge funds, they're making multi-billions capitalizing on the week-to-week volatility, and it's not so different for the retail market. In fact, the majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven approach to the market, they've already made in excess of 6 and 7 figures so far this year, and we're only 6 months into 2021. Goldman Sachs has already begun preparing their clients for what they predict could be one of the most profitable quarters ever seen. If you've been kicking yourself for missing out on some of the biggest trading opportunities so far this year, there is still an opportunity for you to make 2021 your best year yet. In fact, right now, we're consistently banking close to 10,000 points per month at the Gold and Silver Club. So if you're trading at 1 lot, that's $100,000, or if you're trading at 10 lots, that's $1 million. Many of these trading opportunities we have talked you through on the week ahead commodity reports and also gold and silver asset of the day. But of course, if you would like to find out more, join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Members get access to our exclusive live trading room webinars. You have access to our real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. Very simply, in order to find out more information, just click in the link below today's report at www.jointhelivetradingroom.com in order to make an application to join our professional mentorship program. Now, as we move into next week, one of the biggest market moving events, that will be the European Central Bank's monetary policy meeting. That meeting will be next Thursday, and it will shed more light on whether the European Central Bank's new strategy is just window dressing or an actual shift towards a more dovish monetary policy stance to achieve what the ECB hasn't achieved for a decade, which is getting inflation back under control. The ECB meeting, that takes place 1 week ahead of the Federal Reserve's July meeting, which is also likely to be dominated by surging inflation, which is beginning to snowball into a problem that central banks around the world can no longer control. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into next week. Firstly, let's move it over to gold. So as mentioned in detail to you previously, you wanted to look at this sell-off at the end of the quarter, right at the end of June, as an opportunity to buy into gold and build positions. This is when most of the market got ultra bearish on gold here, started to panic sell out of their positions. You know how it goes. Many of the technical analysts out there utilizing their outdated technical strategies, starting to call much lower prices on the metals, expecting gold to break down much further. And of course, this ended up being a fantastic buying opportunity. Start of the month on Thursday, the 1st of July, we immediately saw capital come back into the market alongside the Basel III, which was implemented in the USA on Thursday, the 1st of July. And this, of course, created that slingshot move higher with gold, where we built into 4 positions on this market. And subsequently, we broke out last week to 1-month highs, trading at $1,833 per ounce. In fact, last week, we banked again more profits on our metals trades, banked 2,300 points profit on platinum. So for every 1 lot that you would trade, that's $23,000 of profit. And for every 10 lots that you would be trading, that's $230,000 of profit. All trading opportunities that we've identified with you previously to really buy in on these dips, especially the end of quarter profit taking. Take advantage of these sell-offs as buy opportunities. But again, the important point here is to buy when there's a lot of fear in the market, when you have many traders panic selling out there, not buying at the top of the range, which we keep seeing many technical traders do out there. They wait for their daily confirmation for trades to finally get confirmed, and then when they get into the market, they get slammed. The market goes against them. Great example here on Friday, right? So we've been buying all the way down here at the 1750s, and of course, traders, you've got their delayed confirmation. They start FOMOing in when gold breaks out to 1-month high. What happens? Well, they get slammed on Friday with over a 200-point sell-off to the downside. So our positions are much lower here on gold. They're protected. We've taken some profit off the table. But what I would look at here on gold going into next week is, again, more range-bound price action here. Would not be surprised at all to see a retest back down towards the lows that were tested last week and really continue this range-bound price action, building a base here on gold, which has been doing so for quite some time. Ultimately, I'm expecting gold to do well over the month of July, but going into next week, we can expect more range-bound price action and a catalyst for the next big moves being the European Central Bank announcement, which will be next Thursday, and then the following week after that, we of course have the FOMC statement as well. Another market which you built into nicely over the last couple of weeks, as I mentioned, has been platinum. So we banked 2,300 points in this market last week, and again, after it's already broken out, had quite a significant breakout to the upside, so over an 800-point move. Many traders then start to FOMO in, they catch it too late, and then very simply, you get a 400-point sell-off like we've seen on Thursday through to Friday on platinum. But again, our positions are in much lower here. We've been able to bank profits, protect trades. We're still looking to capitalize on more upside on this market. I would perceive sell-offs as buy opportunities, but it's again important to get in nice and early on these moves, not using delayed confirmation in the market, not utilizing outdated technical strategies, which end up you just getting chopped up, waste a lot of time and lose a lot of money, which we definitely do not want for you. With that, let's move over to the other trade opportunities here that we see going into next week. Copper has been consolidating now for the best part of 3 weeks, building up a solid base. We do have positions that we entered right at the end of the month, then into the start of July, which have done really nicely here. We are definitely battling with overhead resistance right now, but I would look at this as building up pressure for a breakout. Ultimately, I'm bullish on copper here. Once we can take out the swing highs, this is where you could really start to see momentum move back towards that neckline that was broken down from at the usual end of June profit taking, where we saw that pressure to the downside, which ultimately created a great buy opportunity. Another market I would keep on your radar here is Palladium. So Palladium, over the last 4 sessions here, Palladium has broken down 2,500 points. You can see here where it's coming back towards liquidity, back towards key levels of support. I want to keep an eye on this 2,600 zone as we go into next week. We have built positions lower at the 2,500 level. We've got 2 positions on this market, which are currently up just over 1,000 points on each of those trades. We've continued to bank into strength here, but if we were to see a pullback back down towards those previous swing lows, so the 2,500 level, I would be very interested to see how the price reacts at that level and potentially buy in again at that zone. Or we're going to hold at the 2,600 level, build some support at that level, and then springboard higher off this zone. So I would keep a very close eye on that for Palladium as we go into next week. Now, moving over to silver here, we've been consolidating within a tight range for almost 1 month now. And this is where many traders out there, they get panicky, they get shaken out of their positions. They really lack the stamina to stay in trades like this. Let me just show you an example of what happened on gold last year, okay? So this time last year, in the middle of July, gold was struggling to break above the 1820 zone. It kept on coming back, retesting the 1790 zone. This took place over 2 weeks, really testing everyone's stamina in the market. And then finally, as many traders started to give up on gold, got bored of it, moved on to other markets, we then saw that big breakout, which happened on a Sunday open in the last week of July here, and this is where gold absolutely took off from a break above the 1820 zone and went on to break out to all-time highs over the next 3 weeks, where it broke out to $2,070 per ounce. So again, I would keep a very close eye on these consolidations that we're seeing on the metals right now, on copper, but also silver here as well. These kind of sell-offs like this, they tend to get traders panicky, where they start to go ultra bearish. We can see that very clearly from sentiment out there. They start to project for much lower prices. They panic sell out of their positions and often miss out on big opportunities, particularly at this time of year where many traders, they take some time off, they take their eye off the ball, and they end up missing out on massive opportunities. So I would watch out here. Again, the levels I like on silver at the moment are from the 25.50 zone down towards 24.50. So that area of liquidity, I would look at that as a gift if we were to see silver drop down to those prices. Now, we may not dip as low as that, but if we do, I would certainly be interested in building out further positions on this market. As you know, bull markets, they do not move up in a straight line. They zigzag higher, and that presents savvy traders with incredible flow of back-to-back trading opportunities. Technical analysis does not work. We are in a highly data and event-driven trading landscape where the markets, they're changing minute by minute, hour by hour, day by day. And if you want to maximize your money-making potential and really thrive, not just survive, then you need to adapt your strategy to these current market conditions. And most importantly, utilize a professional, research-driven approach to the market. In these times of heightened volatility, rapidly surging inflation, the importance of having an essential income-generating skill like trading has become a must-have necessity. Building multiple streams of income is no longer an option. It is a priority to make sure you are inflation-proof and thrive in this highly lucrative climate, not just survive. And if you want to gain that ultimate edge to really supercharge your wealth in this fast-moving and highly profitable environment, then you need to trade like the hedge funds, the money managers, institutions, utilizing a professional, research-driven approach to the market. Having access to the right data at the right time, it's the single greatest difference between ordinary and extraordinary result. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest level of profitability. Trading like every other misguided retail trader, utilizing outdated technical analysis and gimmicky technical indicators, it will not work in these markets, and you are guaranteed just to get crushed and chopped up in these markets. What you want to make sure is that you're trading the same way that the professionals are, understanding statistics, facts, data in the market. Alongside that, capital flows. You need to know what the daily, the weekly, monthly, quarterly cycles are in the market, the intermarket correlations, the ratios, macroeconomics, key areas of liquidity, and the major news items which will have the biggest impact on commodities. And of course, understand what the hedge funds, money managers, and banks and institutions are doing. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You have access to real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel, that way you're always kept updated with all of the latest commodity reports.